working at Quick Trip as a manager, I was an A player in an A company, and I could go into any convenience store, gas station, or retailer and run it better than 99% of people because I was an A player in an A company. PayPal is still easy money stock regardless of, honestly, who they announced as CEO today. They could have announced Barney as a CEO, okay?
Just tell me which one of you's gonna slap me. What? I'm dying over here. Ted reaches for a chip, I flinch. Robin fixes her hair, I flinch. I'm doing so much flinching, it's bad for my skin. I'm getting crow's feet. Crow's feet!
And it's still been an easy money stock. Like when you got a great company like PayPal trading at the valuation it's trading at, with Braintree and Venmo, they could have probably announced anybody, and it's still a steal deal, right? But at the end of the day, it's an easy buy, man. Absolutely easy buy for me.
PayPal, this guy Alex Chris is the real deal. I happen to like Intuit very much. I think I like him very much. I think it was time. It was the right thing for Dan to step down earlier rather than stay lame duck the whole year, and I wish them very well. I don't want to own the stock. I prefer the stocks of MasterCard and Visa over Square and PayPal. One's old, one's new.
Block stock and PayPal stock have crashed over 20%. Is now a dip buying opportunity? I will give you 5 reasons why Block stock is a buy the dip opportunity. PayPal finally picked out its next CEO. Does this mean fintech is ready to take off shortly? Wall Street said not quite.
Is PayPal stock headed to $30 a share, another 50% downside from here? That's what we're going to discuss in today's video. People are seeing the move down. They're like, is this just going to keep going down and keep going down? Are we going to be at $30 eventually here?
2 years ago, Block Inc., Square was on top of the technology world. E-commerce was booming. Seemingly every business in town was scrambling to establish an online presence to win over lockdown-restricted consumers. Profits soared, as did Block's share price, to a record of $289.23. Since then, the payment solution provider had struggled to adapt to an economic normalization befuddling PayPal and other challengers. The latest setback, a 27% month-to-date plunge to $58.57, follows a second quarter earnings report that the market loathed. But that flashed signs of improvement. So is now a good time to pick up some Block shares or PayPal shares for cheap? I will explain it all right after this.
How you like that? How you like that? Nah. Look at you, now look at me. Look at you.
Welcome back to the Audacious Money Witch channel, where we talk about macroeconomy, stocks, bonds, and commodity markets. If you like any of these topics, you are intelligent. That's why you're here, and you know what to do, and push my button if you like what you see in today's video. Because you're already a success, it is done when you join the Audacious Money Witch Club. This video is brought to you by my website. If you are a good boy, go to audaciousmoneywitch.square.site to add more meaning into your life. If you play your cards right and completely submit like my good boys do, then I will take you under my wing. Author of best-selling books, Goddess Cheryl. My good boys always get rewarded handsomely. You are such a good boy. You like hearing that, don't you? You want to get into the bookstore, you want it to be real, you want it to be true, you want to join the Audacious Money Witch Club, don't you? Block's August 3rd release revealed that Q2 revenue jumped 26% year over year to $5.5 billion, along with increases in both subscription and transaction-based sales. Renewed Bitcoin trading activity drove the consensus topping result. The company also beat on earnings per share, EPS, which more than doubled for the second straight quarter. Considering, number one, smaller merchants comprise the bulk of the payment processing base, and number two, inflation continued to impact consumer spending, the numbers were actually quite impressive. Block is making strides on the road to recovery while its stock stumbles. Here are 5 more reasons why it has become an attractive buy the dip play. Reason number 1. Pumping the brakes is proving effective. In addition to the double beat, management raised its 2023 EBITDA guidance from $1.36 billion to $1.5 billion, which represents 40% profit growth from last year. This can largely be attributed to a slowdown in the spending that is better late than never. Block's decision to pare back technology investments, marketing, and hiring is bearing fruit, with payment volumes on the upswing. The upbeat outlook signals confidence from the leadership team about improving profitability ahead. Reason number 2, secular tailwinds remain intact. Wall Street's financial projections for the next 4 quarters imply consistent sequential and year-over-year EPS growth. Block is expected to return to 2021 EPS levels this year, which would effectively create a springboard for fresh growth in the post-COVID economy. Analysts forecast for 2024 point to 41% profit growth. The brighter outlook stems from shifting global payment trends that took root well before the pandemic. Cash and checks continue to get phased out in favor of digital payments, a process that is still in the early stages in many foreign markets. A tap of the phone to activate a card payment is perceived as safer and more convenient. Rewards programs are an added incentive. The proliferation of smartphones and the spread of 5G internet access are ushering in the era of mobile payments. Block's strong foothold in this space should make it a go-to payment solution for merchants for years to come.
I think the way Cash App is growing organically, as opposed to more of a top-down, let's get this thing moving, stretch. I think there's an organic movement. I think it's going to be fired up now by Bitcoin.
Hit me on my Cash App, check it in the morning. Cash ass. Cash ass.
If payment volumes are rising in today's inflation-riddled, high interest rate environment, they should not only get better as these pressures moderate. Discretionary spending and average ticket size trend higher in a healthier global economy. Reason number 3, Square is undervalued. Based on the consensus EPS estimate for 2024, Block is trading at 25x earnings, with EPS growth expected to be 41% next year. There is a significant disconnect between the company's growth profile and its stock valuation. Looking at it from a different angle, Square has a forward PEG ratio, PE ratio divided by earnings growth of just 0.61. A PEG ratio below 1 often indicates that a stock is undervalued. Reason number 4, Wall Street bulls are stampeding. Since the Q2 earnings release, Wall Street sentiment has been predominantly bullish. 9 firms have reiterated buy ratings, and 2 have stuck with holds. One of the 2 holds, Morgan Stanley, has a $69 price target, showing even the cautious are bullish at current levels. Several analysts raised their targets after the report, which brought the consensus target up to around $87. This implies more than 40% upside over the next 12 months. It's no coincidence that Block's projected return matches management's profit growth outlook. If it can deliver on this target, the market will have some catching up to do. Reason number 5. Technicals are bullish too. The post-earnings downturn, while harsh, has come in light volume. Not that many shareholders have bailed, and importantly, not many smart money institutional investors, which gives less credibility to the dip. And considering Square recovered nicely from a high volume sell-off in March 2023, a recovery from this month's sell-off should be a piece of cake. On the daily chart, a relative strength indicator, RSI, reading of 21 also suggests oversold conditions. Bottom line, improving fundamentals, long-term tailwinds, and a cheap valuation make Block worth a swipe at current levels. Well, if you think finding a new CEO can stop PayPal stock price from falling, you are wrong.
But PayPal, it dropped, and then it dropped some more. It never lifted, including today, where it lost another 4%. The reason? PayPal lives in the wrong neighborhood. It's considered a financial, and nothing feels safe in that segment.
The house of pain.
At one point, PayPal was the darling of e-commerce. These days, it looks more like a bank. And right now, bank stocks are poison. There's so many buy now, pay later offerings, so many ways to pay for things online and in-store, including the very competitive Apple Pay, that there's just no such thing as financial where just one line is soft.
As activist investor Elliott Investment dissolves stake in PayPal according to its 13F filing, PayPal named Alex Chris, a VP from tax preparation software company, into it. Last week, PayPal launched a US dollar stablecoin, becoming the first major financial technology firm to embrace digital currencies for payment and transfer. Personally, I believe Bitcoin over all stablecoin that any company can create. That's why I choose to own Block over PayPal, because Block's founder and CEO, Jack, believes in a decentralized system for everyone.
Crypto is out there, and it's not going away.
It just feels sketchy.
In the same way that a new internet is sketchy, Richard? What is crypto, if not decentralized, anonymous, secure, and an existential threat to the powers that be?
Because decentralized platforms have no single owner or leader and are not beholden to commercial or financial interests. Decentralized projects are less likely to collect and sell users' data and less susceptible to censorship. Remember last time PayPal said they will legally fine users $2,500 minimum for misinformation or breaking their rules. Why would you want to support that? Well, Block doesn't do that. Bitcoin will not disappear. If it's in your Bitcoin wallet through Cash App helps keep your Bitcoin safe by using a secure cold storage solution. Cash App acts as a Bitcoin wallet. It securely stores the private keys for your Bitcoin, so you can instantly access it at any time via internet.
There is a lot of competition out there. There are other payment systems. Aaron, what is the competitive advantage for Square? I mean, what is the argument to a seller to use Square over anything else? And do you think you can conquer more small and medium businesses out there?
Absolutely, and the feedback that I get is that our suite of tools, the ecosystem, is what keeps people. They like having everything in one place so that they can see the analytics for how their business run. In my own sushi bar, I noticed that I thought I was doing these incredible Monday lunches. Intuitively in my gut, I just thought, oh, we've nailed it. Then when I looked at the numbers, I found out I should actually close Mondays for lunch and be open on Sunday. So the tool is something that really enables them to understand how their business is working and to make choices about staffing, about supplies, inventory, and to grow.
I was going to say, Emily, I think the suite of products that we have is a very unique ecosystem. Like, I don't see us in a world where we're necessarily head-to-head competing against others. We're really opening up the market for the ecosystem of products that a small business could want. And with the 28 million small businesses in the United States, many of whom still aren't on credit card rails, there's so much opportunity for so many sellers to use the types of products that we offer.
The stock market is having a short-term correction, in my opinion. Michael Burry has sold Baba Zoom and all his Chinese plays and shorting the NASDAQ and S&P 500 currently. I don't think he is an investor at this point. He is a short-term trader who changes its portfolio drastically 3 months at a time. As a long-term investor, we really can't follow his moves. As for his put options, 1.6 billion number is not accurate at all. And I bet he is early again this time. I think we could have a stock market crash, but not until 2025. You are such a good boy for watching my video right till the end. Bye.